Hello everyone. So welcome to one more video in the playlist on accounting cycle, and in this we are going to solve a simple and small problem that is about preparing closing entries. So there are actually in my one of my previous videos I mentioned adjustment entries and closing entries are one and the same, but actually not. Closing entries are different and adjusting entries are different. But anyway, in this case we are working on creating closing entries. So let us see what is this. So so there is a adjusted trial balance is given, amounts are in thousands, and I'm getting this data. Simply the question asked is prepare closing entries and prepare post closing trial balance. Now the closing entries purpose is to close temporary accounts. Okay, so to close temporary accounts. So what are these temporary accounts? So sometime back I mentioned red ale. Okay, so if you see, let me search for that. Yeah, so here you can see red ale. Revenues, expenses and dividends, they are temporary accounts. Ale, assets, liabilities and equities, they are permanent accounts. So these closing entries are there to remove to make revenue zero, expenses zero and dividends zero. So that is our objective. So let us see temporary and permanent. Let us classify. Okay, so now look here. So cash is an asset, so it is a permanent account. Accounts receivable is an asset, so permanent. Supplies asset, permanent. Accounts payable is a liability, so therefore again it is a permanent account, because see, assets, liabilities and equity are permanent accounts. Okay, so permanent account. Unearned service revenue is a liability, that is also permanent account. Share capital ordinary is also this is equity, so permanent account. Retained earnings, yeah, so retained earnings is also equity, so permanent account. Dividends is a temporary account, so this is temporary. Service revenue is temporary. Salaries and wages, expense, all expenses are temporary, so all these three expenses are temporary. Salaries and wages payable is a liability, and this liability is a permanent account, so it should be there. So now I have these 5 temporary accounts which we need to remove. So how to remove is, first we starts with so there is a small diagram. So we have revenues and we have expenses and we have income summary, then we have retained earnings, and we have dividends. So first entry will be between these two, so this is 1. So what you have to do, make revenue 0 and get them into income summary. Second entry will be this one, all expenses, get them into income summary. Third entry will be this one, all income summary, get it into retained earnings. I'll explain what I mean. And fourth entry is this one, all dividends going into retained earnings. So these 4 steps we have to do it. So first I will start with the revenues and income summary. So what we have to do is now I'm starting the solution. So Jeju Consultants. So this is problem E4.7. Then we have closing entries. So the journal entries, you know already the format. The format is same. So it is date, account, debit and credit. So there will be reference, which right now we are not using. Now, so debit, credit, date and account. Okay, so since these are closing entries, so obviously the date will be 30th June 2020. So here it will be 30th June. Now what I said, the first transaction will be between revenues and income summary. Now look at the revenues. Revenues is having a credit balance. So to make the credit balance disappear, I have to give a debit balance. So 4300 debit balance if I give, then the revenue will be disappearing. So that's what I will do. Service revenue. So 4300. So what will happen? Now here service revenue is having a credit balance and here service revenue has a debit balance. So effectively, if I on top of this, if I add the other one, the service revenue becomes 0. So now the other one is income summary. So income summary is a new account, so that I'll keep it here directly like this. Because this is debit, here I have to keep credit. So this is the first entry. Okay, so that is this one, first entry. This we completed. Next, second entry is between expenses and income summary. Okay, so now expenses, if you see, we have 3 expenses. Okay, so we have, see, this one became 0. So we have 3 expenses. Okay, so the service revenue has been cleared. Now the 3 expenses are there. So these 3 expenses are on the debit side. So to cancel the debit, we need a credit entry. So that is what I will do. Again 30th June. Now first line I am keeping empty because first line is for debit. Okay, so now credit. So I will make 3 entries here. Salaries and wages expenses. Next one is miscellaneous expenses. And last one is supplies expense. So these 3 expenses, whichever are temporary expenses are there, I have made them. So now 1260, 256 and 1900. So 1260, 256 and 1900. So okay, so now these 3 debit entries will get cancelled by these 3 credit entries. But then here I need to make a closing entry. So here obviously the second one, if you see, one side expenses are there, other side income summary is there. So obviously here it will be income summary. And what is the total of these 3? Okay, so that I need to calculate. So 1260 plus 256 plus 1900. So that will be 3416. Okay, so this entry is made to take care of expenses. Okay, so now expenses are done. So the second here is done. Now next entry will be between retained earnings and income summary. Now look at income summary. What is the balance in the income summary? You see, income summary on credit side is 4300 and on the debit side is 3416. So if I make the net balance in the income summary, so that will be 4300 minus 4300 minus 3416. So I am getting 884. Now this 884 credit balance will be there. So to cancel that credit balance, so again I am saying income summary and keep 884 under the debit. So this 884 will cancel the credit of income summary. So now entire income summary is cleared. So now that income summary which is cleared will be going into retained earnings. Okay, so here I will say retained earnings. Now this retained earnings will become 884 here under the credit. Again this is 30th June. So now I made 3 entries. Okay, so this third entry is also completed. Now last entry is dividends. Okay, so now look at the dividends. Dividend is having a debit balance of 550. So to cancel this dividend, I need a credit balance of 550, then it will be cancelled. So dividends I will write in the second line with a credit balance of 550. Now to balance this dividends, I need to keep retained earnings here. And that also 550, I'll keep it here. So this is again adjusting entry on 30th June. So now this fourth entry is also completed. So as a result, what happens? Now if I prepare the T account, so just for your example, I am preparing a T account. So the T account is like this. Just a minute. See, if I create a T account of service revenue, although this is not required, I'm just giving it for explanation. See, service revenue has a debit of 4300, but service revenue according to the trial balance, already there is a 4300 on the credit side. Okay, so 4300, and these two cancel each other and balance will become 0. The same thing happens for salaries and wages. So here 1260 is under credit, here 1260 is under debit. So the T account will cancel. 256 under credit and here 256 under debit and so on. So these three accounts also, so these all will become 0. Similarly, dividends. Okay. So now what we need to calculate most, and income summary also, if you see income summary. So here you see income summary has 43 on credit side. So 4300, then 3416 on debit side, and then one more 884 on debit side. Okay. So now if you see balance, so this side it is 4300, this side it is 4300. So net balance is 0. Okay. So income summary is also gone. So only thing that is remaining is retained earnings. Okay. So let us calculate the retained earnings. Retained earnings. Now, what is the opening balance of retained earnings? If you look at the this trial balance, here retained earnings is 1660 on the credit side. Okay, so 1660 on the credit side. Meanwhile, here you see, if you come down, there is a retained earning 884 on the credit side. Okay, so 884 will come here, and one more retained earnings 550 is on the debit side. So now I need to calculate the balance. So what is the balance now? So it will be, so first I am adding the credit side, 1660 plus 884 minus 550. So this will be 1994 as my credit balance under retained earnings. Now I have everything ready. So these temporary accounts are gone. So